Okay, so we are live now with Utrust's Crypto Taxation and Accounting webinar. Welcome, everyone. Welcome to every one of the attendees, and welcome our wonderful speakers, Michelle O'Connor from TaxBit and Gianluca from Soluzione Tasse. Gianluca, I don't know if I should be referring to the company as Soluzione Tasse or Crypt&Co. I don't know which one you are representing today. Probably
don't
both.
worry, I'm the chairman of Soluzione Tasse, so it's fine. Crypt&Co is just a division of our company. So it's
right.
Fine.
So I'll take that opportunity to present both companies. TaxBit is a unified platform for crypto taxation and accounting. It should help you with all of the questions we are going to be discussing today. So if you, Michelle, are you exclusive to the US right now, or can people use the platform from elsewhere?
We do have a few enterprise customers that are in the UK, but our focus mainly now is in the United States. Right.
So if you're joining us from the US and if you are looking for this solution, definitely check out TaxBit. It's designed by CPAs and tax attorneys. It will seamlessly integrate with your system that you're currently using now, and it's trusted by authorities and the industry. Soluzione Tasse, however, is located in Italy. They are primarily serving customers from within the EU. Is that right, Gianluca?
That's right.
And they are fiscal consultants. They have a long experience with the area in more traditional senses. And now with Crypt&Co, they are specializing in crypto and digital assets. So they will help you with HUDLR compliance, with cash out compliance. They will make sure you can cash out safely, whatever your needs are. So check them out if you are in the EU. So a couple of warnings first for everyone who's joining us. The chat is private, so we will be seeing what you're writing. If you want to say anything to us, say anything to the speakers, we will be able to see it. You won't. But there is a different tab on the side, which is for the Q&A. We will be hosting a Q&A at the end of the two conferences. So throughout the afternoon, feel free to drop your questions there. We will be selecting the ones that we think are best and the ones that we think are more interesting. And both Michelle and Gianluca will kindly answer them at the end of the session. So that being said, Gianluca will be speaking first. So Gianluca, feel free to give us your presentation whenever you're ready.
Yes, thank you for the introduction, of course, and thank you for the opportunity to be here today. So let me start sharing my presentation. Yes, here I am. So just a bit of background on myself. I'm Gianluca Massini Rosati. I'm the CEO and founder of Soluzione Tasse, as said already. Soluzione Tasse is an Italian public company listed on the Milan Stock Exchange. Our core business is in the consulting sector, mainly on tax planning and finance. And from a few months, we have launched a new division named Crypt&Co that provides consulting to companies and individuals on cryptocurrencies and virtual assets in order to let them comply with all the rules of regulation, not only in Italy, but also all over Europe. We have a team of accountants and lawyers with a specific expertise in crypto, and they're able to understand the specific questions that a lot of people are asking from all over Europe, actually. But okay, so let's go into this presentation. So I think that a lot of people are in this moment are wondering what to do to be compliant with the regulation in Europe. And this is a good question, but it is not so easy to answer, because if we have the European Union, every country has a different kind of classifications for cryptos and several kind of rules applied to this industry. So for today, we are going to have a look at some of the European countries like Portugal, UK, Germany, France, Romania, and Italy. And to do that, we have tried to prepare a table that synthesizes the main things to know about these countries, starting from individual taxation, and then we'll speak about companies. As a private individual investing in crypto, Portugal would be the one of the best country for a taxation point of view. Actually, because cryptos are considered as a means of payment, so basically there is no capital gain tax unless the individual is a professional trader there. In the UK, the opposite. Crypto are considered financial activities. Then any kind of game is taxable, and the individual have to pay taxes based on the kind of income that they have. For example, if they are receiving cryptos as a reward from DeFi, for the HMRC, that is the tax agency in the UK, it is like a traditional income. Instead, if you are making money with trading, it is subjected to capital gain tax. And the percentage of the tax depends from the overall income of the individual. So you have an allowance of around 12,000 sterling, but over that amount, you have to pay taxes on your gain. I know that I've just started and it could be a kind of a headache, but actually it's not the end. So we have also other jurisdiction, other classification, other rules in the other countries. And of course, today I'm just giving you an overview of the different rules that we have in Europe. There are many specific things to understand that we cannot cover today, otherwise we will need a day, not an hour or webinar. So let's have a look at Germany, France, and Romania, where in Germany and France, authorities classified crypto as intangible assets, whereas in Romania, they consider crypto as foreign currencies. In this country, when you sell cryptos for something else, you have to pay taxes. That could be progressive, up to 45% if you are in Germany, proportional, up to 30% like in France, or flat at 10% like in Romania. But there are also some exemptions. In fact, in Germany, if you hold your crypto for more than 1 year, you won't have to pay taxes on the gain. So it's really interesting for a lot of people that are holding their crypto. Or in France, if you sell crypto for another crypto, for example, also stablecoin, you're not taxable. Whereas in Romania, there is an allowance of around 120 euros. I know it's like nothing. And over that, you have to pay taxes. And what about Italy? Because as we mentioned before that we will speak also about Italy today. As usual, in Italy, nothing is black or white. So in Italy, you always have a scale of gray or multicolor, because actually in Italy, we don't have any specific rule applied to cryptos. We have only a couple of interpretations that are not rule, and they cannot be applied to all the Italian tax residents. This interpretation comes from the Italian tax agency and say that you should have to pay capital gain tax at 26% every time that you make a gain selling cryptos for anything else. But actually, it is only an interpretation, because in Italy, the tax agency has not the power to create a new rule. So no rules came out from the parliament. And then there are several professionals that say that you don't have to pay taxes on crypto profits until any rules come out from the government or the parliament. But now let's talk also about companies, because I think that there are a lot of people that are entrepreneurs or managers of their company in the crypto space attending this webinar. And for companies, it should be a bit easier, I think, compared to with individuals. Why be easier? Because it should be easier because based on the interpretation committee of the International Financial Reporting Standard, IFRS, the cryptos should follow two international standards. The first one is ES2, so like inventory, applies to cryptocurrencies when they are held for sale in the ordinary course of a business. If ES2 is not applicable, an entity applies ES38, that is intangible assets, or to holdings of cryptocurrencies. But what does that mean exactly? So let's have a look a bit deeper. So at ES2, the standard 2 inventory requires inventories to be measured at the lower of cost and net realizable value, and outlines different kind of acceptable method of determining cost, including specific identification in some cases, first in, first out, and also weighted average cost. Whereas in the ES 38, let's go deep also in this. The ES 38 says that the intangible assets are initially measured at the cost, subsequently measured at the cost or using the revaluation model, and amortized as on a systematic basis over their useful lives, unless the asset, like crypto, for example, has an indefinite useful life, in which case is not amortized. But before completing the presentation, let me go for some frequently asked questions. So let's start from this. Receiving a payment in crypto is like receiving a payment in fiat for a company. I mean, of course not, because the accounting method is different. If you sell something to a client, of course you have to address the invoice to this client, or record the invoice and the revenue in your books, your balance sheet, and you have to do it in your local currency, let's say euros, for example. But when you receive a Bitcoin as a means of payment, you should record it as a stock increasing among your virtual assets. And the invoice that you address to the client will be your loading price of that Bitcoin in your stock, in your inventory, actually. And then when you sell the Bitcoin that you have received from your clients, or you use that Bitcoin to buy something else, you will have to record profit or loss that you get from these transactions. So you understand that is different from receiving traditional fiat currency. Let's see another question, another frequently asked question. As a company, can you have a crypto wallet? Of course, the answer is it's yes. And we have two different kind of wallets for a company. You can have a custodian wallet or a non-custodial wallet. Actually, this is the only difference, because if you have a custodial wallet, you pass it through a KYC or a KYB process. So there is a third-party provider that certify the ownership of that wallet. For example, if you have an account with Utrust, they are going to certify that the specific wallet is your company wallet, because they've done on you KYC and also KYB procedures. Or if you have a traditional wallet like MetaMask or Trust Wallet or Ledger Wallet, for example, you will have to self-certify the ownership of that wallet, and this certification has to be included in the financial statement or your note of your company. So also this is something that can happen. So you have to just to decide which kind of solution you would like you prefer, actually. And in conclusion, let me give you a couple of last two suggestions to tackle crypto accounting and taxation. I would say that first of all, there are multiple factors to keep in mind, but the best practice number one is tracking the transactions. That's why we also use CryptoBooks, that is a crypto tracker created for the European accounting standard to reconcile all the crypto transactions for our clients, actually. Or if you are in the US, of course, you can use TaxBit that makes I think similar things to what we use for Europe. And the second important thing that I can suggest you is to speak with an expert. I think that is the only way to prevent problems, wasting of time and money, and avoid risk of fines, because in Europe the regulation is not so clear yet. So the only way, I think, is speak with an expert about that. And that's why we at Crypt&Co have decided also to make you a gift, because to all the people that are following this webinar, we would like to give you a free consultation with one of our crypto experts. You just need to scan the QR code on the slide on the screen, and you will be able to book a free consultation with us. I think that's it. So I've done with my slides, with my presentation, and it was a great pleasure speaking at this webinar. And of course, I will remain here for the Q&A session.
Okay, that's beautiful. Thank you so much for your lovely presentation. I will remind everyone that we will be hosting a Q&A. So if you have questions specifically for Gianluca, please don't hesitate. Drop them in the Q&A tab, which should be on the right-hand side of your monitor. I will take a moment between the two talks to remind you all of the reason why we are hosting this webinar. It is because Utrust has just introduced one of our brand new features, which will allow any and all merchants who use the Utrust service, whether they are using it for their web store or if they are using it to invoice, whether they are a large business or a small business, you will now be able to accept payments in crypto and settle in crypto. So you will be able to use our offer of stablecoins, which is USDC and USDT, to settle all your payments. Gianluca and Michelle are here today to help us figure out how that works from an accounting and taxation point of view, which is very important. But I will have you know, and I will remind you again, that yes, you can do this through Utrust. It's easy, it's seamless. As long as you have Utrust on your web store or you use it for invoices, then you can do this. So now we move on to Michelle. Michelle, I'll have you know that we already have people in the chat and the Q&A asking about the US. So this is a perfect transition for you because you will be talking about the US area a little more. So please, Michelle.
Great. Thank you. Well, I'm happy to be here. Have known Utrust for quite a while. So I'm really excited to talk about a topic that is becoming more exciting, which I'm thrilled about, considering that I work at a tax and accounting company. A little bit about me before I go into this, why crypto is important. I've worked in the industry since 2015. I worked at a digital wallet for years and actually got to know the TaxBit team as their first customer. So have years of history back with them before I joined last year to spearhead their marketing efforts. So in the United States, cryptocurrency is treated differently than it is in the regions that Gianluca went over. We view it as property, which is a little bit difficult as if you look at it's called cryptocurrency, but it's treated as property and it's taxed as such. So that can be a little bit complex. And for those of you that are in the United States or following how we treat regulations, two big regulations came to surface this year. Late last year, an infrastructure bill was rolled out. It's going into effect in January 2023. And then we had an executive order from President Biden that really emphasized the importance of digital assets and general regulation, understanding, definition, including also mentioning a CBDC. So it was a wonderful indicator that the regulatory bodies in the United States are taking this asset class seriously and looking to ensure adoption and understand it more. And that's obviously a wonderful indicator for our industry, but for those of you in the audience as well. So if we dive in a little bit more, how has the industry changed from the early days in 2009 until where we are in 2022? There's evolution. So if you even look back to a few years ago, settlement was challenging. How traditional banks interacted with crypto was still somewhat burdensome and slow. Crypto has really changed that. Crypto is always open. It's 24/7, 365. It's borderless. There are now these new emerging asset classes that are offered as far as NFTs. We have CBDCs, stablecoins. Mainstream adoption has really happened over the last 12 to 18 months at a very fast pace. We've seen brands like Nike, Louis Vuitton, Tesla, Ferrari. Everyone is getting into the crypto world, and adopting Web3 is seemingly how everyone's referring into it now. And what does that mean for you? There's obstacles. So for consumers, it's incredibly challenging in the United States, especially based on the way we treat it. Every transaction that you make in cryptocurrency, you have to set a cost basis. So For those of you that are more active, or those of you that are in the business of accepting crypto for payment or invoicing for crypto or holding it on your books, that's a very challenging and complex situation where if you have 100 purchases in one day, those are 100 instances where you have to set and track cost bases. That's where companies like TaxBit come in and help simplify that with both our consumer and our enterprise offerings. When you look at exchanges and brokers, their volume is especially challenging because there's usually arbitrage. There are, from tens of thousands to millions of trades a day, a week, or a month, or in a year. That means there's additional auditing, filing, and tracking that needs to occur, which can be incredibly challenging and burdensome. If you look at businesses, like a lot of those in the audience, if you're looking to accept crypto in the United States via payment, if you're looking to invoice and accept crypto, it becomes a little bit more complex because you both have to account for it as income, but also as a digital asset on your books and how that's treated with two different tax situations. So it really becomes complex, but as we look at the adoption and iteration of how regulatory bodies and entities interact with and view this asset class, it will continue to, it is our expectation to become more clarified of how businesses and larger entities can interact with the asset class more seamlessly. If you look at the instance of accepting crypto as a business or as a consultant, there are different ways that you can treat it. In the United States, we see quite a few different companies that are accepting, especially there are states within the United States that have legalized Bitcoin or are accepting cryptocurrency for their own property tax or state and government tax. So the way that the United States works, we're different regulatory bodies at the state and federal level. So that's another layer of complexity of how things are treated on a national scale versus at a local scale. And then if you look at how the government treats it, there are the different bodies within the government, and they all have their own view, interpretation of teams of how they're interacting with the digital asset class and frankly, how they view it. At TaxBit, we won a contract with the IRS in 2021, and we just re-upped that contract. Our relationship with the IRS is they come to us as a trusted auditor. When they have an audit, we basically review all of the audit data and information and report out what's accurate and where things are at. So if you look at from the United States perspective, we have been given a seal of approval by the IRS, which is gold standard in our country. And if you look at some of our offerings and how we view what we are doing on a scaling scale to ensure that this asset class can move forward, it's really education and information. Anyone who's here, if you go to our website, there's extensive content, and it's really been broken down by our incredible SME team to be very understandable and digestible. So we really are here to be not only the industry leading software provider for both consumers and institutional and retails. We're also here to just ensure that if you have questions or concerns, whether you're new to the crypto industry as a retail investor, if you're a Fortune 500 who's trying to determine if you actually get into the digital asset place, we're really that trusted source of knowledge and truth to answer a lot of complex questions. It's no secret, and we've all seen that some of these companies here are not only involved in crypto from a wallet and participation standpoint, Meta, PayPal, Google, the NFL. We're seeing a lot of these companies hiring and building huge crypto arms, and that just continues to further iterate that this industry is going to continue to be mainstream. And it's most important if, for those of you on here, you're still early, but how do you ensure compliance and understand scalability for your business to make sure that it's the best investment and most strategic way for you to transact and trade? In the US, we had the infrastructure bill that really gave further clarity on the way that the different entities within the digital asset space regulate, as well as reporting and what was required. This goes into effect in 2023, and for 2024, it will be reporting. So this is really something new for our industry, and the regulations provided further clarity, but also means that a lot of those who have digital assets on the books accept, and especially for exchanges and DeFi entities, there's more reporting and regulatory impact on your company. So it can be something that's challenging, and definitely don't want to wait until November and December to figure out how you're going to conquer that. And if you look at tax reporting and compliance, the biggest challenge that we see, especially in the United States, is anyone that has any volume on your books in the digital asset space, tracking those, ensuring they're accurate from cost basis, calculation, transactions, deposits, fees, exchange fees, gas fees, minting fees. That is complex. And I think a lot of people were still using Excel spreadsheets until not that long ago, and finding that was not only overwhelming, but led to sweeping inaccuracies. And we've seen a lot of people come back who are using that method who actually, unfortunately, were getting audited. So really ensuring that your data and sources of truth are accurate, especially if you have high volumes, that you have real cost basis and tracking and reporting, as well as manually calculating. These can lead to human error or Excel error. And that's where companies like TaxBit come in. We've simplified and streamlined this with our corporate accounting suite for any business that accepts crypto, as well as with our consumer product for our retail investors. So while it seems very overwhelming and there's a lot of information, and it is very complex, thankfully, our founder, who's a CPA, and our co-founder, who's a tax attorney, saw this problem presenting in 2017, and TaxBit is here today to help solve it for you. There's a lot of questions that we see, especially with evolution of this space, clarifying that in the US, it is viewed as property, not currency. How is mining and staking treated? A lot of people are now involved in earning a yield. And how are transaction fees treated? What can be claimed on your taxes and what cannot? So there are a lot of complex sublayers within the tax and reporting and accounting that, to ensure that you're not only compliant, but you're getting the most out of your crypto investments, it's really important to take time to understand and get to know and work with a partner or a professional to ensure that your portfolio is optimized for not only tax compliance, but long-term investment and returns. As I mentioned earlier, digital asset accounting is challenging. This complements the tax side. If you're looking at tracking gain loss transactions, impairment and pricing mechanics, misalignment between accounting economics can really leave you as a business entity or owner in a very precarious position. And that's where we believe it's incredibly important to help provide information as well as software to streamline this. We see companies like Coinbase, MicroStrategy, and Tesla using this because they have volume of digital assets on their books and they have to be able to account for it. And then if you have any questions, I encourage you, which I'm sure you do, please drop them above. If we can't get to them today, I will provide a way to get in contact with myself and our team afterwards. And then please go ahead, scan the code. We're at taxbit.com and we're at Twitter at TaxBit. We're always here to answer questions. Feel free to ask even the most simple to the most complex, and our team can be sure to help answer those.
Okay, that was brilliant, Michelle. Thank you so much for your presentation.
You bet.
Before we move on to our Q&A session, I would like to mention that we also have an offer at Utrust. In fact, I am going to activate it right now. So if you are watching this at home, you will probably see the little offer button lighting up, and you will be able to get 0% fees on your first month if you subscribe to Utrust right now. Utrust already charges only one fee, a 1% flat fee. There are no hidden fees ever. But if you join using the link I just provided, from the first month of your registration, from the moment you complete your registration, your first month will be with 0% fees. So now, I had read in the chat that there was someone who was asking to see the QR code for Gianluca's presentation again because they seem to have missed it. They already said that they had fixed the problem, but regardless, I will be, with Gianluca's permission, I will be activating his presentation again to show the QR code one more time. Is that okay, Gianluca?
Yeah, of course. I'm just finding the right slide to share with the audience.
Okay, you can do it yourself.
Yeah.
That will maybe be easier than.
Just 1 second.
Okay.
Yeah, here it is.
Okay. So, guys, you are seeing the QR code again. So if you missed it the first time, make sure to save it now. And okay, I think we're done. So we can move on to the Q&A part of our afternoon. I will tell you as well that I have activated a poll. Sometime during the Q&A, I'm going to bring it down and share a different one. But if you haven't answered yet, please do us a favor and do so. Now, let's move on to the Q&A. My first question is from Athanasios Alevizos. I have no idea if I'm pronouncing this correctly, but they ask, what if a business receives Tether as a means of payment? So I'm going to open this question to all stablecoins. Is this different in any way from the Bitcoins, the Ethereums, the more decentralized currencies, guys, either in the EU or in the US?
Of course, I can answer for the EU, but if a business receives Tether, that is for the EU is the same, like Bitcoin or Ether or whatever, because Tether is not a legal tender in Europe. So it has to be accounted as crypto inventory based on the YES2 standard, as I told you before. And when the business will sell the USDT that received, at the same way as to record profit or loss on that transactions.
Okay. Michelle, how about the US? Is it any different to use a stablecoin?
Same with the US. It's viewed as a digital asset, so it's tracked as such.
Okay, so that one was simple. Now, second question. This is from Nicolo Bardoscia, and he asks about some specifics regarding the following activities: airdrops, occasional NFT buys and sells, DeFi yields, and staking. I feel like some of these things were already answered, others not so much. So, on to you.
Yes, from the name, I think it's from Italy. Nicolo is an Italian name, so I can.
He actually said that he was particularly curious about Italy.
Okay,
but I think this will be of interest to everyone.
Yeah, it's of course based on the country, it's different because, for example, as I told you before, in the UK, this kind of revenue from crypto are actually income. So if you are staking or put your crypto into the DeFi system, you are getting airdrop or any kind of revenues in the UK will be taxed as an income. In Italy, it's different, and also it's very difficult to answer to this question because we don't have any kind of regulation about that. If you talk about NFT, for example, in Italy, if you are buying or if you're trading with art, you don't have to pay taxes on the art. So if the NFT is something that is connected with something that artistic, actually you won't have to pay taxes on that gain. But as I told you before, we don't have any certainty on that because we don't have any kind of regulation. But on the other hand, as we don't have any regulation, they cannot condemn us as we evade the taxation.
Okay.
So
Michelle, anything to add?
Yeah, I mean, there's understand the question being together, but there's a lot of different points here. So airdrops are taxed as income. What can be challenging for that is people see airdrops as a reward or a benefit or a free incentive, or sometimes they receive them unknowingly. And those are reportable, and you need to report them. So we've had a lot of people in the US be either frustrated because they received an airdrop and the cost basis was set when it was worth quite a bit, and then they lost money, or if they received an airdrop and they converted it, it was worth a lot and then it fell out. So it's a little bit more challenging and complex, but that's really where it's important to just track these things at a cost basis at time of receipt. For NFTs, buys and sells, what's interesting about NFTs is the steps to get in to buy an NFT. So you can't go straight from usually your traditional wallet to buy an NFT. You usually have to go to a more centralized wallet to then go to a decentralized wallet, and if it's Ethereum, sometimes you have to go to wrapped Ethereum. So there's different points of purchase and trade that all have different cost basis. So we have a few blog posts on this that give it more in-depth explanations and give examples of different exchanges and wallets and protocols. But it's really something that, then to Gianluca's point, it's a gray area as far as if it's who's determining the value of this piece of art, if it's virtual art versus right now you can go to Sotheby's or Christie's and they can evaluate an actual form of art. There are some companies that have come out to start giving valuations to NFTs because it's been a higher demand. But right now it's kind of an area where they're viewed as art, and what does that look like because they're actually on the blockchain. So it's still complex, but that goes back to the importance in the US of the executive order, emphasizing that this asset class is moving forward. So they need to get some clarity.
I'll actually follow that up with another question that speaks to the same thing. This is from Stefan Krupski, and it says, in the US, do we foresee regulators coming to a decision in regards to audit requirements, specifically for digital assets, NFT projects, and even certain blockchains, Solana, etc.?
So with the infrastructure bill, that went very in depth as far as reporting requirements. I would say that is a substantial step forward and will probably indicate that other steps are following. A lot of companies are already ensuring for their own compliance to be able to get MTL licenses and stuff like that. They need to be able to support audits, and that's where our entire enterprise arm from the corporate accounting side came from.
Mm-hmm. So you think that regulators have already come to a decision in regards to audit requirements? This is already something that can be figured out.
If you look at between the infrastructure bill and the executive order, it's pretty indicative that things are moving that way towards clarity.
Okay. So a question for Gianluca now. This is from Mirko Serino. He is Italian. Suppose I cash out part of my crypto investments, turning them back to euro. In a few years, the parliament issues a law stating the private citizens profiting from crypto should pay 26% tax on profits. Can it be retroactive?
It could actually, it could be, but we don't know. In Italy, sometimes they create new rules that are retroactive. It happens often, so it could happen also in the crypto space actually, and so no one knows about that. So from what if you're asking me what I think that it will happen, I think that they are going to create a kind of starting point. So they are clearing the past with a kind of percentage, and then from that starting point onwards, you will have to pay 26%. I think that it could be a
so you don't think it will be retroactive. You admit the possibility, but you don't think it's likely.
Yes.
Right.
Yes.
Okay, this is actually a very interesting question that I don't think anyone in the world can answer, but I'll ask it anyway. How could you explain why non-trading crypto gains are not taxable in Portugal?
Actually, in Portugal, it depends. Actually, we would have to ask to our friend, to Bernard, what he means with non-trading crypto gains. So if you are not trading, how can you have a gain, actually? But so
I think it just means that, like, you bought Bitcoin when it was worth $100, and now you have made a fortune.
It's like a crypto trading as well. So you are buying at the price, you're selling at another price. So it's trading as well. So just because the regulation says that. So in Portugal, the crypto are a means of payment, and they are not. They don't have to pay taxes on that. Actually, this is
as a Portuguese person that works in a crypto company, I'm not a specialist, but it's a political decision, essentially. It's the Portuguese parliament and government have decided that these things shouldn't be taxed as such.
Also, it depends from. Actually, there is something to say about that. It depends, because if you are a trader, so your only income are based on trading, then you have this is professional for you, and then you have to pay tax on some grades.
Exactly. Okay. Let's see if I get one more. Okay, so this is from SR, and they are asking, how does it work in case I want to stake crypto as a company in Europe?
Actually, it should be quite easy to answer to this question, because if you're staking crypto with your company, it will become an income for your company. So you are trading as based on the ES38, as I told you before, as the intangible asset. So you will have a gain on that asset, and it will become a revenue for your company, and you will have to pay corporation tax on that.
Okay. Can you repeat that last part, please? So there's a compression tax. I'm not sure.
Yeah, corporation tax. Yes, because
corporation. I misunderstood.
Yeah, corporation tax. So when you make an income inside of your company, all the income goes to corporation tax.
Right. Okay. All right. So I'm going to move on to the next question from Henrique Oliveira. I think you have sort of answered this one, but not specifically. Can't stable coins that are stored in a custodial wallet where you can fastly exchange for fiat be recognized in balance sheet as cash already in any circumstances?
No, actually not.
the head nods say everything. It's just no, period. I understand. This is actually a question that we get a lot of the time, because of stable coins are seen very differently by the people who are using them, but from taxation and accounting point of view, they are not different. They are stable, they are not volatile, but it doesn't matter. At the end of the day, they are legislated in the same way.
Right.
Let me check if there are any more outstanding questions. Okay. I think that the only question that we have not answered is from Ralph Wunder, who I suppose is German, because he's asking about Germany specifically. And he is asking about, for investors from Germany, after UTK switches to the Algorand blockchain, I don't think that part is significant. It will be possible to use on-chain staking. This is the part that's significant. How will on-chain staking be assessed for tax purposes in Germany? He also asked subsequently about airdrops. So I suppose you can take both questions at the same time.
Yes, I think it works in the same way. So in Germany, if you hold the crypto for more than 1 year, it won't be taxable. So actually, if you are receiving some kind of coins from this kind of activity, and you will hold the crypto for more than 1 year, you won't have to pay taxes on it. I think, based on what is the regulation now.
Okay.
Otherwise, if you're selling before 1 year, you will have to pay taxes up to 45% based on your income.
Okay. These are the kinds of questions, by the way, for both of you, that your companies help people with on a daily basis, right? So if you are in the EU or if you are in the US, TaxBit and Crypt&Co are the authorities on these kinds of issues. We have tagged them everywhere on social media. So if you need a little help that's from going forward, you know where to look and you know who to contact. I'd like to thank you both so much for your presentations. They were lovely. I'd like to thank you as well for taking the time to answer the questions from the attendees. That was very kind of you. To everyone that joined us, thanks so much. We are hosting these events for you, so it was wonderful to see so many of you live and so many of you answering our polls and asking questions. We definitely appreciate it. I will remind you one more time that we do have an offer up on the screen. Gianluca also provided one that we showed you earlier. And that was it. That was our webinar. Thank you so much, everyone, once again. And we will see you next time. Cheers.
Thank you very much.
Thank
Bye.
you.